Right then, bird's eye view on gold. We've got 1, 2, 3 swing lows on the weekly chart in place. That signifies a bullish trend and upside potential. Only and when that low is broken with the thesis turned bearish on a weekly outlook. So you're looking at that famous 1930 area, 1930s. For a target of liquidity below these lows here. And there's not a lot in the way of that move lower as per that gap. So that's the outlook on the downside, but currently we're on the front side of the trend, so staying bullish. Having said that, we've got this chart pattern. So that is a downside continuation pattern. Turn that. See that there? So make it red for bearish. So the market is coiling. It's coiling below this low here, but supported so far at these lows over here. That low there, sorry. Let's mark that properly. So breaking that low could be potentially quite significant. But again, I stress, we're still on the front side of the trend. Well, depending where you draw that trend line, I guess. So, no, correct me. No, I'm going to stand corrected on that. We are actually, so we've broken that trend line. So the market is sliding out. It's breaking structure to the downside. It's moved back up. It's been resisted in a turn that white so you can see it. So we corrected into a 38.2, 1980-ish. So the bias, in fact, is actually bearish. So we've corrected up into there. So we're coiling. So I'm looking for a move lower. On the weekly chart. Okay. So 1930-ish is a very key, get that marked out properly. It's a key area of support. Now if we go over to the daily chart, clean this up. So on the daily chart, you can see that market coiling. You've got these double bottom lows. So there's liquidity under there. Can be targeted. And liquidity above these double top highs could also be just as well targeted. In there. So we're sort of bounded at the moment, but let's see if we can't. I mean, maybe premature to be expecting a breakout at this moment, but if there is to be one, the bias is bearish. So there could be a spike up, liquidity hunt, and a move lower in continuation of that bearish market. Um, Now we've got the Fed coming up over here. So CPI tomorrow, and then the Fed. So crucial time really. Um, Maybe we're coming into support ahead of the Fed. Very difficult to know, but all we can see is the price action. So we're breaking swing lows here on the hourly chart. This is so we're breaking those swing lows. Therefore, we're in anticipation of a swing high to be formed. So a lower high, which could be there, depending on the next 18 minutes of this hourly candle. If this closes lower, then that will be a swing high, putting the bearish bias in play again. We've already had a 50% mean reversion, so this could be tipping over now. Tipping over in line with the daily and weekly outlooks. You've got that. So this kind of scenario towards the support area seems to be the bias.